What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at Nike, and this is a company that I've been keeping an eye on because it is down over 23% this year. And what I want to do in this video is I want to take a look at the issues that have been facing Nike over this time period. I also want to go over their upcoming earnings. They are announcing earnings later this week, and some of those issues we will hopefully get some guidance on during this earnings call. The other things we'll take a look at are revenue numbers, EPS numbers, shares outstanding, free cash flow, valuation, and then leave off the video by taking a look at where analysts are projecting EPS numbers to go over the next year. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Nike's stock chart. We can see that the stock is down almost 23.5% year to date. If we look over the last year, it's actually down only 5.5%. Over the last 5 years, Nike is up only 7.25%. And we can see that its all-time highs are around $177.50. And from that point to where we are trading at now, the stock is down almost 50%. Over the last couple of years, Nike has faced a number of issues. The most recent is the consumer spending issue. Right now, there are a lot of concerns from economists and investors around how much consumers are really going to spend over the next year or so. There has been a lot of inflation, and also the Fed is not stepping in and lowering interest rates quite yet. And this is growing concerns around unemployment, as well as how much consumers are really going to spend over this holiday period, and that will directly affect Nike's business. Another big concern for Nike is China. China has shut down their economy over and over again as they have seen increases in cases of the virus. However, over the last 8 or so months, China has began to reopen their economy, and this will start to impact Nike's business as they can get back to growth in China. However, in the short term, this has been an issue that has obstructed some of the growth around their numbers. And finally, another big issue for Nike is the retail crime issue that we are seeing. We have seen a number of companies come out and discuss how crime rates have increased in their stores, and this is greatly affecting their profit margins. We've seen the likes of Target, Foot Locker, as well as a number of other companies come out and discuss how this is having a big impact on their business. And obviously, Nike is present in all of these stores, and if their goods are being stolen, it is not only affecting companies like Target, but it will also affect wholesalers like Nike. And I would expect we'll get greater insight to some of these challenges and what Nike is doing to mitigate them during their earnings announcement that is expected on September 28th. We also have analysts projecting EPS numbers to come in at 76 cents and revenue to come in around $13.02 billion. Nike's fiscal 2023 year ended last quarter, and they reported full year revenues at $51.2 billion, which was up 10% compared to the prior year, or up 16% on a currency neutral basis. Double-digit growth for a company like Nike that is very well established is impressive. However, what's more impressive is what Nike is doing with their Nike Direct sales. This is their direct sales department where they are selling directly to consumers, and they were able to grow this in the fourth quarter to $5.5 billion, which is up 15% compared to the prior year, or up 18% on a currency neutral basis. And Nike Direct will have a big impact on Nike's profit margins. This is due to a couple of factors. The first being the fact that they are selling directly to consumers, which will result in them no longer having to pay retailers like Target to have their products represented in their stores. The other benefit is retail crime. With them selling direct to consumers online, there will no longer be as big of an issue with retail crime and people stealing the products. One thing Nike does a very good job at is returning value to shareholders, and they have done this by increasing their dividend payouts for 21 straight years. And in fiscal year 2023, the company has returned approximately $7.5 billion to shareholders. That includes $2 billion in dividends, which is up 10% year over year, and also $5.5 billion in share repurchases. In Nike's most recent fiscal year report, we can also see how their revenues are divided up by region. For North America, Nike experienced around 18% growth. In Europe, Middle East, and Africa, they experienced 8% growth, or 21% growth in a constant currency environment. If we look at Asia Pacific and Latin America, they experienced around 8% growth or 17% growth on a constant currency basis. However, in China, they experienced a lot of weakness. Footwear grew around 0%, apparel down 14%, and equipment down 24%. This resulted in a negative 4% decline in their overall revenues in China. Overall, Nike has done a very good job of growing their revenue consistently consistently over time. We can see that they are currently sitting at $51.2 billion of trailing 12-month revenue. If we go to 5 years ago, we can see that they were bringing in around $36.4 billion in revenue. We do see this slight decline for 4 quarters. This is resulting from just one bad quarter that they experienced at the start of the pandemic, where they only brought in around $6.3 billion in revenue. This obviously had an effect on their business due to the shutting down of a lot of retailers that had their clothing represented in their stores. One of the current concerns for investors has to do with EPS growth around Nike. They are currently sitting at a trailing 12-month EPS number of $3.23, which is down from their $3.80 that they were bringing in around a year ago. And if we look at their last couple of quarters, they've only brought in around 66 cents and 80 cents. And if we look back to 2018, we can see that they were bringing in similar numbers of around 80 to 70 cents. So there are some concerns around where EPS is headed in the future. As I mentioned earlier, Nike has done a very good job of decreasing their shares outstanding. They're currently sitting around 1.57 billion shares outstanding. If we compare that to 5 years ago, they were sitting around 1.66 billion shares outstanding. In terms of free cash flow, Nike has experienced relatively flat growth over the last 4 to 5 years. We can see that they are currently sitting at $4.8 billion in free cash flow. And if we go back to 2019, they were sitting around $4.78 billion in free cash flow. And in 2018, they brought in around $4 billion in free cash flow. However, I believe Nike Direct is going to impact a lot of these numbers. If they are able to bring more consumers to their online business and help them buy direct, this will help their profit numbers and thus help their free cash flow numbers. Nike does tend to trade at a higher premium compared to the market, and currently they are sitting at a forward P ratio of 24.57. If we look around a year ago, they were trading at a 35.97. And a lot of this has to do with the stability around their business. They have done a very good job of growing their dividend over time, and a lot of times companies that are able to grow their dividend consistently and have a very stable business model will trade at a more premium compared to the broader market. We could take a look at EPS projections from analysts on Yahoo Finance, and there are currently 35 analysts covering this current fiscal year, and they have an average EPS estimate of $3.70, a low estimate of $3.48, and a high estimate of $3.89. And for 2025, the average EPS estimate jumps up to $4.36, the low estimate to $3.81, and the high estimate to $4.93. And if we look at the PE ratios associated with the average EPS estimates for 2024 and 2025, we get around a 24.6 for 2024 numbers and a 20.9 for 2025 numbers. So personally, when I look at Nike, I see a company that has grown their revenue very solidly over the last 5 or so years. However, they have not converted that growth into EPS growth. And that is one of the things that I personally look for is solid EPS numbers. And what I want to see from Nike is them to get past some of these concerns. I think China reopening is going to help propel the business forward and help with some growth throughout China. I also think that Nike Direct is going to mitigate some of the concerns around retail crime. And overall, I think these will have a big impact on the business. If I was more of a dividend investor, I would look at adding Nike at some of these lower prices that we are seeing, especially considering the fact that Nike is down almost 50% from their all-time highs of around $180. However, keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.